Good afternoon. We are the Senate Finance Committee. Today is Thursday, January 19th, 2023. We have two briefings this afternoon. We are going to begin, colleagues, with a briefing from the Maryland Insurance Administration. And we have, I believe, 6 panelists. So you can come up, Commissioner, and bring up whoever you'd like with you. And I think the members have the agenda with all the names, but you can feel free to introduce yourselves before you speak. It's good to see you.
Thank you very much. I appreciate it. We do come as a bit of a pack, but part of our goal is to make sure that you can put names with faces and you know the resources that are always available to you through the MIA.
I appreciate that. So if members, if you're ready, we will proceed. Thank you so much.
Well, thank you very much. Thank you for the opportunity to meet today and to give you a briefing on what the Maryland Insurance Administration is and what we do. If I may, my name is Kathleen Borain. I serve as the Maryland Insurance Commissioner. With me today is Corey Boone, who's the Special Deputy Commissioner for Regulatory Innovation and Technology. Corey, do you mind standing? He's shy. You know Corey. Van Dorsey, our principal counsel, is a member of the Office of the Attorney General. David Cooney, the Associate Commissioner for Life and Health. Mary Quay, the Associate Commissioner for Market Regulation and Professional Licensing. Robert Barron, the Associate Commissioner for Property and Casualty. Joy Hatchett, the Associate Commissioner for Consumer Education and Advocacy. Brad Boban, our Chief Actuary. Andrew Tress, who is our Director of Government Relations, and Jamie Sexton, who is the Director of Health Insurance Regulatory Affairs and National Partnerships. So, and we have many, many more back in the office. We didn't actually bring everybody today. So let me just start. Next slide, please. Just as a very high-level overview for those of you who may be new to this committee, the Maryland Insurance Administration is the state agency that's charged with the regulation of Maryland's $46 billion insurance industry. Our core mission is to protect the rights and interests of insurance consumers. That's making sure we have a strong and competitive marketplace. It's making sure that our insurance laws and regulatory requirements are enforced, and by offering consumers education and assistance. We are structured as an independent unit of state government. What that means is that we are specially funded through the collection of fees and assessments on the insurance industry. We do not pull any money out of the general fund. We do, however, distribute money to the general fund. So through premium tax dollars and other fines that are assessed against companies for improper behavior, that money goes to the general fund. Next slide, please. So our core regulatory functions, I'm not going to read these. You do have the slide decks to take back with you, but important to think about our licensing function, our conduct of market conduct examinations and investigations. We'll talk about that in a little bit more detail. Reviewing and approving, at least with some lines, rates and forms. Investigating insurance fraud. Next slide, please. Investigating consumer complaints, educating and engaging with consumers, and Commissioner Hatchett will go through that in great detail. And then probably most important, the last bullet point on here, is that we're here to provide technical expertise and guidance to you, the members of the General Assembly, as well as the governor and other state agencies. So when you have ideas, when you have thoughts, when you have questions, when you have concerns, we're the agency that you can come to get technical advice and an understanding of what maybe the impact of some of your ideas may be. Will also help you with technical drafting issues so that we can help you achieve what it is you want to achieve in legislation that you're promoting. The next slide, please. All state insurance commissioners are part of the National Association of Insurance Commissioners, which is a standard-setting body that all the members and all the territories in the District of Columbia. It's fundamentally a mechanism for sharing regulatory enforcement information, coordinating where it's appropriate with other state and federal regulators, establishing national policy. I chair the Innovation and Cybersecurity Technology, the H Committee. In that regard, probably the three things that I do that are going to be of most interest to this committee will be chairing the Algorithmic Bias Collaboration Forum, which is currently looking at the impact of algorithmic bias in decision-making by insurance companies. We are currently working on, I'm the lead drafter of an interpretive bulletin for the insurance industry nationally that will provide regulatory guidance about the responsible use of AI by insurance companies in their decision-making process across all lines. The other area is data privacy. The subcommittee on data privacy under H is working on consolidating and updating our privacy models, and then cybersecurity, of course, which is a very important function, not just in terms of the availability of cybersecurity insurance, but also making sure that the insurance industry keeps its data secure. We are also a member of the Health Insurance Committee, where we play a large role with regard to PBM regulation and looking at market and sales practices, particularly for seniors. Next slide. We are a member of the International Insurance Relations, the G Committee. I sit with FIO, FSOC, and the state of Iowa as part of Team USA in the EU-US Insurance Dialogue, which is focused right now on understanding the U.S. versus the EU approach to AI regulation and also climate change and its impact on the insurance industry. I chair the Solvency Workstream. I won't go through all of these because you can just read them. But the key here is that we are deeply engaged at the national level, and that gives us the ability not only to bring Maryland approaches to the national stage, but also bring the depth of what's happening at the national level to Maryland. Good ideas. Next slide, please. This just gives you an idea of some of our organizational units. We have a really large, talented, trained senior staff of professionals who are available to you to help you and assist you, as well as your constituents. The Office of the Commissioner, next slide, please. These are our operational divisions that you're going to hear from. And then it's also very important that the MIA has a really good and strong relationship with the Office of the Attorney General. I spent 5 years in the Office of the Attorney General under Joe Curran at the end of the Glendenning administration. My deputy principal counsel at the time succeeded me as principal counsel. He's here today. We work very closely with them. We've always had a really great relationship. They're a really important part of our team. Finally, who we regulate. These are the kinds of businesses. It's not just insurers, but it's other types of entities that are part of the insurance industry. And just quickly, so you have the ability to take with you, the next slide is our org chart within the Office of the Commissioner, the key players that are there, so that you have that handy for you. And with that, I will turn this over to Associate Commissioner David Cooney, who will talk about our Life and Health Division.
Thank you, Madam Commissioner. Before you proceed, thank you for that introduction and information. I know many of the members probably know this because you all have been on the committee, but for those of us that are new, on slide 6, she had something about PBM, and I didn't know what that meant. So returning members know that that is pharmacy benefit managers. But for those of us that are new, I just wanted to mention that, and certainly to the rest of you as you present, please be mindful. Some of us are catching up with you, so please help us with some acronyms.
I apologize.
No
Thank
problem
you.
at all. No problem. Thanks so much.
All right, thank you, Madam Chair. For the record, I am David Cooney, Associate Commissioner for Life and Health with the Maryland Insurance Administration. And today I'm going to briefly highlight some of the important issues for the Life and Health Division. So some of our primary functions in Life and Health include reviewing for approval all insurance contracts sold in Maryland for life, health, annuity, credit, dental plan organizations, and health maintenance organizations. Before any of these products may be sold in Maryland, Life and Health staff will review those contracts to ensure they comply with all applicable Maryland insurance laws. Additionally, we investigate complaints filed by consumers and healthcare providers for all of these same coverages. And in 2022, we concluded 3,463 complaint investigations, and we recovered more than $3.8 million for Maryland consumers. Next slide, please. So this slide describes some of the other types of filings we receive. I won't go into detail on those now, but again, they're there for your records, and I'm happy to answer questions on any of those later. So we can go on to the next slide. So without getting too much into the weeds, I did want to briefly mention two of the most important life and health issues that Life and Health is currently dealing with. The first is network adequacy, where the MIA is charged with ensuring that healthcare provider networks are sufficient to meet the needs of enrollees. The MIA has had regulations in effect since the end of 2017 that establish standards for network adequacy. However, in reviewing the annual network access plans that carriers file with us, we did identify several areas where the existing regulations could be improved. So over the past few years, we've taken a very thoughtful approach to revising the regulations, and we've publicly vetted multiple drafts of revised regulations with all the impacted stakeholders. At this point, we are very eager to get the revised regulations in place as soon as possible because we believe the changes will significantly improve our ability to effectively regulate in this area. We submitted the regulations for formal proposal in December, and at this point, we're just waiting for them to be published. And now the second issue is mental health parity, and you will often hear this discussed under the acronym MAPIA. And MAPIA generally requires health insurance contracts to provide the same level of benefits for mental health and substance use disorder as are applicable to medical and surgical benefits. This includes things like cost sharing, visit limits, and non-quantitative treatment limitations, which are referred to as NQTLs. And those are essentially any limitation on the scope or duration of benefits that cannot be quantified numerically. And a good example of an NQTL is medical necessity, also things like credentialing for providers to be in the network, any kind of contractual exclusions, all those things are considered NQTLs. So there's a recent law, next slide please. Oh, I'm sorry, we can back that up, I wasn't quite ready for that. So there is a new Maryland law that requires carriers to submit comprehensive reports to the MIA in 2022 and 2024, demonstrating that the NQTLs under insurance contracts comply with MAPIA. We're currently reviewing these reports. It is a very complex and painstaking analysis that goes into it, so we're still working through that, but we will be submitting an interim report to the General Assembly at the end of 2023 on what our findings are so far. Now, next slide, please. So we really want to make sure the committee members are aware of the MIA's role in investigating complaints for health benefit plans specifically. We can review complaints related to denials based on medical necessity, denials of all or part of a claim for other reasons, and basically any other possible violations of Maryland insurance law. And in particular, we want to make sure you're familiar with our unit that reviews medical necessity complaints. That's our appeals and grievance unit. This unit is available 24 hours a day, 7 days a week, including holidays, to assist consumers with any kind of urgent or emergency issues that come up. And we strongly encourage you to refer your constituents to our appeals and grievance unit if they're having any struggles obtaining coverage that their providers believe is medically necessary. This unit is very successful at facilitating communications with carriers, and in 2022, in situations where the MIA actually had authority over the underlying plan, the staff was able to get the carriers to overturn their decisions and provide coverage for the required service 72.4% of the time. And this doesn't even necessarily mean the carrier was violating the law by the initial denial, but our experience has shown just by getting the MIA involved, there's a high likelihood that carriers will overturn their initial denial. Next slide, please. So although we would like to assist as many consumers as possible, it is important to be aware that there are many complaints that we cannot handle because we do lack jurisdiction. This includes plans that are issued in a different state, employee health benefit plans where the plans are self-funded by the employer, and federal programs such as Medicare, Medicaid, and the Federal Employees Health Benefits Program. So the most we can do in these situations is confirm what regulatory agency actually has authority and then refer the consumers to that agency. And that wraps up for Life and Health.
So just as we're wrapping up for Life and Health, I will tell you that we don't leave those people hanging when we know about them. If there is something that we can do, we will reach out. And literally yesterday, we were able to get TRICARE and the carrier to reverse their position and resolve a very serious issue that we had no jurisdiction over. But just by the fact that my folks were willing to get involved and have conversations and push the envelope, they backed off, and the person got what they needed. So when their nephew called, we got it taken care of because David's unit and those folks that are there, are willing to go that extra mile. And with that, we'll go with property and casualty. And Robert, introduce yourself, please.
Thank you. Good afternoon, everyone. It's my pleasure to be in front of the Senate Finance Committee again. For the record, and for those of you who don't know me, my name is Robert Barron. I have the honor to serve as the Associate Commissioner for the Property and Casualty Division at the MIA, where I have been employed now for 23 years. Next slide, Andrew. The P&C Division is responsible for regulating the insurance sector that encompasses a wide range of policy types, like homeowners, automobile insurance, commercial insurance, workers' compensation, professional liability like medical malpractice, and a host of others. It's a very broad range of subjects that fall under the property and casualty umbrella. We have two core teams in the division, the Rates and Forms Review Team and the Property and Casualty Complaints Unit. And they are made up of experienced professional regulators, along with a detailed support staff, who I'd be remiss to not mention, who provides support to our division in carrying out its mission. With respect to property and casualty rates and forms, it's important to note that Maryland has a competitive property and casualty marketplace. Under existing law, property and casualty insurers have to file their policy forms and endorsements for our review and our prior approval before they can start to sell those policies in the state. Insurers are also required to file their rates with the MIA for review. Under Maryland's file and use rating statutes for a competitive market, insurers do not need to obtain the MIA's prior approval in order to implement rate changes. That said, we do review all rate filings to ensure that rates meet our statutory requirements of not being inadequate, excessive, or unfairly discriminatory. However, we cannot, under the law, find a filed rate to be excessive unless we are able to first determine that a competitive market does not exist or that the rate filing itself is actuarially unsound. Next slide. With respect to consumer complaints, our team receives about 5,000 complaints on average a year from your respective constituencies. And in 2022, the Consumer Complaints Unit helped consumers to recover over $3.7 million in the form of premium refunds and claim payments. Next slide. Some of the most common complaint types that we receive are shown on this slide. With respect to premium increase complaints and coverage termination situations, we're very often successful in getting positive outcomes for our policyholders. And as David said earlier in the life and health arena, even in situations where there may not necessarily be a violation of the law, our involvement often gets inures to the benefit of policyholders. In the claim complaint scenarios, our investigations ensure that insurance companies honor their contractual obligations and that they don't act arbitrarily or capriciously or violate any of Maryland insurance laws, including the Unfair Claims Settlement Practices Act or our claim handling regulations. Next slide. So in closing, I just want to kind of restate something the Commissioner mentioned, which is to let you all know that the P&C division exists not only to serve and address the concerns of your constituents, but also as a resource for you and your staff. We are available to help you as subject matter experts in all things related to property and casualty insurance, from the most routine matters to the hot topics of the day, some of which are listed on this slide here. And with that, turn it over to our next presenter.
Thank you. Our Associate Commissioner for Consumer Education and Advocacy.
Good afternoon, committee chair and members. Joy Hatchett, Associate Commissioner for the Consumer Education and Advocacy Unit at the Maryland Insurance Administration. One of the primary responsibilities of my unit is to try to assist consumers to understand their insurance policies, make sure they understand their rights and their obligations under those policies, and also to make sure that they understand how to shop for those policies. And what we do is we do that in a number of ways, and I'm going to go over some of those briefly. But this is the most important thing that I want to stress. We are there to help your constituents. And to the extent that you would like to have an event and you'd like us to either give a presentation or attend or just explain something to your constituents, that's our purpose. Prior to COVID, we did over 500 in-person events a year. COVID threw all of us in sort of a different arena. I'm proud to say that last year, we were back up to 350 in-person events a year. And we regulate the entire state. That means that we are responsible for educating consumers through the entire state. We go to the Eastern Shore, we go to Western Maryland, Southern Maryland. I've worked with some of you and your constituents, and I hope that you've seen us at your libraries, your MVAs, your fairs, your farmers markets. One of the things that Commissioner Bahrain feels very strongly about, meet people where they are. So we're not going to just go to formal conventions, because not everybody attends those. We're going to go where people are. What we also try to do is talk to those communities and say, all right, how do you want to obtain information? Some people like to read brochures, so we've got tons of brochures. Some people like these in-person events, so we do those. Some people like short videos. We've got a strong social media presence. Some people want to hear a presentation. And as the commissioner will tell you, prior to COVID, I was, we can't do stuff virtually. That'll never work. We now do a lot of events virtually. Last year, we did 180, I think either 185 or somewhere around those numbers of virtual presentations on all topics. Last night, we did one on life insurance. We do a lot of first-time home buyer events. You name it, if it's related to insurance, we do it. And then the other thing, as the commissioner mentioned, we don't necessarily just stop at insurance. We also try to give consumers resources on topics that will assist them. For example, next week, we're doing a presentation to let people know about 211, what those resources are. Last week, we did something about winter storm preparedness. We did something about scams. So that just sort of gives you a feel for the different topics. And if you believe that your constituents or any consumers would benefit from a particular topic, let us know. We're happy to figure out, and either we'll be the presenter or we'll find somebody to do that, because consumer education is critical to what we believe our citizens deserve. So now I'm going to go through these boring slides. Sorry. So as I said, last year we participated in 345 in-person events. And then also the virtual, we did 188 virtual events. And then I mentioned us listening, because frequently we as regulators, all we want to do is talk. It's important that you listen. And so one of the ways that we listened was we held a series of listening sessions where we invited community groups from all different perspectives to tell us what they wanted to hear, tell us what their issues were. And we used that information to build some of our outreach and to figure out what communities we were missing. Because it's easy if you do the same thing day in and day out, but you're missing a portion of your population if you just do that. And so it's important to us to figure out and listen to what we're missing. Next slide, please. And as I mentioned, we have a lot of literature on our website. We've also tried to make that available to people whose English is not their first language. So we have members on our staff that speak both Spanish and Korean to help us with that. And then we're working toward expanding that so that we can make our information available to different communities. And then one of the other things that we're looking at is different technology that will allow us to even expand it more. One of the things, the commissioner introduced you to Corey Boone. One of the things that he is constantly working on is what innovative things can we do to expand and reach more people. Next slide, please. So as Robert indicated, he has the formal property and casualty complaint unit. I oversee something called the Rapid Response Program, which deals with property and casualty claims. Now, it's claims only. It's not premium increases or cancellations. But rapid response is just that. We try to assist consumers very quickly getting their issues resolved. But also a key component of that goes back to the education. So my people who are part of our rapid response program, they spend a lot of time explaining, well, this is why your claim was denied. Or if you had had this additional coverage, you would have been able to get payment for that. So it's truly an educational component to the rapid response program. And last year we did a little bit over 800 complaints, and we were able to recover under $5 million for the constituents that came through my program. So the last piece, and honestly, this is a very, very important piece. Disaster response and disaster recovery. So, as you know, Maryland has seen its share of disasters, from tornadoes to major fires, to apartment explosions, to any type of storm. My team is responsible for coordinating the Insurance Administration's response to that. And if you think about it, that insurance response is critical, because the sooner people can get money in their hands to pay a claim, the sooner they're not dependent on the state and the local governments. So we need to get those claims paid promptly. And so what we try to do is a go-between between the consumer, trying to help them understand what they need to do, and the insurance companies, making sure that they have all of the information to pay those claims in accordance with the contract. Now, this goes once again to my, oh, we can't do anything virtually. So the commissioner said, you know, Joy, what we really need to do is we need to be able to assist consumers after a disaster virtually. And so the concept of a virtual disaster center, because what we used to do is we would travel all over the state to meet with consumers in person. We did it after La Plata, we did it after Isabel, we did, you name it, we were there. But COVID brought a whole new world. And our consumers still needed our help. So what we have been able to do is assist consumers on Zoom. they still get that individual one-on-one contact with a trained person, but they don't have to leave either their home or wherever they're staying at that point in time. And we've done a number of these virtual disaster centers. The latest one was as a result of the severe weather event we had in December. And so that sort of brings to a close my portion.
Good afternoon, Madam Chair and members of the committee. I am Mary Quay, the Associate Commissioner for Market Regulation and Professional Licensing, and I oversee a number of units that have somewhat different responsibilities. Market conduct units examine the general business practices of insurers and other regulated entities, and this is as opposed to looking at an individual complaint. And the continuum of market conduct actions may be anything from picking up the phone to talk to a company and find out what's going on, to sending a team out to do a full-scale market conduct exam. A market conduct exam is one where the MIA decides what we will examine, what topics we want to cover, and requires the company to give us randomly selected samples that we choose and tell them to provide to us. An investigation usually arises out of a complaint file where a violation was found, and it comes to market conduct so that we can get restitution for all the consumers who had the same issue but did not know to file a complaint about it. Next slide. And one thing to note is that companies pay for exams, but not for investigations. Companies are selected for investigation or examination based on various factors. As I said, an investigation may arise from a single complaint, or we may see a pattern of complaints that leads to an exam. We also have a market analysis unit that looks at national data through the NAIC and prepares reports on anything that points to a possible problem that should it be investigated. When we find a violation of the law, there are several steps that we can take. We will always require restitution to consumers where it is possible. We will ask the company to prepare a corrective action plan so that it doesn't happen again. And we will determine if it's appropriate to apply a monetary penalty that then goes to the general fund. Next slide. And these are some of our recoveries for fiscal year 2022. Next slide. Our hot topics for the next year, as Kathleen mentioned, the cybersecurity bill is being implemented, and we investigate reports of cybersecurity events. AI and algorithmic bias is something where we're working with other divisions within the MIA and with the NAIC, and this ties in with redlining because we want to make sure that biases that may exist in data or that are built into algorithms because of past practices do not lead to unfairly biased decisions now or in the future. We take allegations of redlining or basing premiums, especially auto and homeowners premiums, on race or other prohibited categories very seriously. And this is something that our market conduct unit can look into in some depth. The No Surprises Act was an important piece of federal legislation. And the focus of the No Surprises Act is to protect consumers from surprise bills when they have emergency services or go to an in-network facility and don't realize they're being treated by out-of-network providers. And market conduct also works with other divisions and with the NAIC. I call it the improper marketing of health plans, and these may be plans that are legitimate insurance being sold in deceptive ways, or plans that purport to be a substitute for health insurance, but may be little more than scams. Next slide. A different unit within my division is producer licensing or professional licensing. And we reviewed the applications from insurance producers and other insurance professionals and determine if they can be licensed. And they work with other units within the MIA to conduct background checks, such as criminal background checks, and a vendor to administer exams to candidates and to approve continuing education classes. Next slide. Title enforcement. This is a different area for us. Title producers are licensed by the MIA because they sell title insurance. However, they also conduct real estate settlements. And this means that they have access to large sums of money. We regulate them to ensure that they are honest and they are competent. And so if you have a constituent who has a complaint that the person conducting the settlement mishandled funds or failed to file a deed, that would come to the MIA, and we can do anything from, well, we may find there was not a violation, but if we find a violation, we can require restitution and take steps up to revoking a license.
So I'm just going to jump in and pretend to be Acting Associate Commissioner Joe Smith and just briefly mention our Insurance Fraud and Producer Enforcement Division. So two very important things that we do are, first of all, make sure that we are preventing insurance fraud everywhere that we can. We have a unit that works both the civil side and the criminal side to investigate, identify, and take action with respect to insurance fraud. A big part of what that unit also does is make sure that consumers aren't misled. So they make sure that people who are out trying to convince consumers to do one thing or another actually have the right training and the right licenses. We work very closely with many local government officials who see the storm chasers or folks that are coming out after an event and, promising that they're going to get them insurance coverage in one way or the other. We take a lot of action to try to step back those folks and make sure that consumers aren't defrauded, frankly. The other thing that unit does is it enforces the professional licensing requirements, so that if we have a professional that has violated the law or stepped outside the bounds of what they're supposed to do, we will, as Mary indicated, with regard to title producers, with regard to any licensees, professional licensees, we will investigate their activity, and if we find that they've violated the law, we can take action from finding them to suspending them to revoking their license. So that's that unit. And then quickly again, I'm sorry, next slide. I'm also going to pretend to be Associate Commissioner Lynn Beckner and just briefly talk about our Financial Regulation Division. That's the place where we look at, frankly, the financial health of both our domestic companies and companies who want to do business here. So we have a team of financial examiners, accountants, et cetera, who, as companies come in, we make sure that they're financially sound. We make sure that they're following all the statutory accounting practices that insurance companies have to follow. Insurance companies are not allowed to use GAAP accounting. They have to use a special form of statutory accounting that makes them put more money in the bank and more money into reserves. So we have a unit that oversees all of their investments, as well as overseeing their business practices, the transactions that they engage in. From sort of one thing that you will hear as members of this committee is from time to time, the MIA will come to you and ask you to pass a piece of legislation that we refer to as an accreditation standard. And what that means is when a company is what's called domiciled in a state, that is, Maryland is their state of incorporation. Maryland is their lead regulator. That means that we are the ones that are primarily responsible for their solvency and their financial health. And all the other states rely on our work and our work product in making sure that they're okay to have them do business in their state. And we rely likewise on other states as well for that same thing. So in order to make sure that we can all trust each other and we're all operating from the same playbook, we have our financial examination handbook that lays out these standards. And these standards are accreditation standards. And there are a number of things that each state has to agree it's going to abide by so that The state can be accredited for financial exams, which means our financial examination work can be accepted by another state. So when we come to you, we'll explain to you the importance of why an accreditation standard. There aren't a lot of them, but there's one or two every year. In fact, you're going to see one this year, and we'll explain why it's important. So I wanted to highlight that. The last thing that I will say is that if any of these topics interest you, on the next page, and yeah, there you go, current topics, we're happy to talk about them in more detail. We are very involved in the NAIC's macroprudential working group, which is very focused on private equity ownership of insurance companies and making sure that that particular form of ownership does not lead to any sort of abuses with regard to assets. We are very involved with climate risk and cybersecurity risk. It's part of our exam. Maryland has adopted a special questionnaire specifically with regard to weather-related changes, and we play leadership roles in both of those issues at the NAIC. And with that, let me turn this over to our chief actuary, who will talk briefly about
Hi.
rates.
Hi, thank you very much for having me here today, to Madam Chair and the committee. I'm Brad Bobin. I am the Chief Actuary at the MIA. Next slide, please. So the main role of my office, the Office of the Chief Actuary, is to review health insurance rates. Unlike P&C, health insurance rates must be approved prior to use. So any health insurance rate in the state has been reviewed by my team, and we have gone through all of the supporting data and assumptions that the actuaries have used to set those rates, and we have validated and verified and approved those via review. Health insurance includes what everybody thinks of as health insurance, which is comprehensive major medical health insurance. Most people get it through their employer. Some people buy it directly from the exchange. But it also includes a wide variety of different lines of business that are listed on this slide, like long-term care, Medicare supplement policies, dental and vision policies, specified disease policies that will pay out if you're diagnosed with a particular disease, fixed indemnity policies like Aflac cells that pay out if you have a hospitalization or a doctor visit. And so all of these are part of what my department reviews and approves. And for all of these, we're making sure that rates are not excessive, inadequate, or discriminatory. We need to make sure that the premiums are not excessive, inadequate, or discriminatory. We need to make sure that companies can cover all of their claims with the premiums. We need to guarantee that it's not excessive. We want carriers to be able to cover actual costs and a small, modest profit margin, and we ensure that it's not discriminatory, that rating factors comply with all state and federal laws, and that any rating factors are actuarially justified and have the data to support them. My department reviewed about 488 filings last year across all these different lines of business. About 45% of those were new or rate neutral filings. About 45% were increases, and the other 10% were rate decreases. And so, carriers and us monitor experience on an ongoing basis, and the driver of rate increases or decreases are claims coming in higher or lower than originally anticipated. For those 45% of rate increase requests that we got, about 2/3 of those we ultimately approved an increase lower than what the carriers asked for. We engage with their actuaries back and forth via objections and target assumptions where we're in disagreement on, and generally meet somewhere in the middle. About 1/3 of those we approved what was asked for. We found that they were justified, and less than 1% do we disapprove. That's pretty rare. Usually the carriers work with us to set an acceptable rate level. Next slide, please. So just a little bit about comprehensive major medical, which is, the most important line of health insurance. If you don't have comprehensive major medical, you're uninsured. And the majority of people get their comprehensive major medical coverage from their employer, and the majority of those employer plans are self-insured. And self-insured accounts are exempt from state regulation because of the federal ERISA laws. So we don't have regulatory authority. We don't review rates for those self-insured accounts. So what we do review rates for are fully insured, individual, small group, and large group. That covers about 18% of Maryland residents under the age of 65. So, you know, they are very important markets, and we spend a lot of time reviewing these markets. And, you know, these markets are where the Affordable Care Act, ACA, applies. In the large group and small group market, the ACA was not a huge disruptor. It made relatively incremental changes. But in the individual market, the ACA drastically changed the landscape. Prior to the ACA, the individual market was underwritten. People could be denied coverage if they had medical conditions. The medical conditions could be excluded, pre-existing exclusion conditions, and people could be rated up and charged more with they have health conditions. And the ACA eliminated all of that in the individual market. And so now these plans are guaranteed issue, guaranteed renewable. Nobody can be charged for their health status. They must cover a full set of essential health benefits. And you know, as a result of all of this, the individual market was in a lot of trouble back in 2018. The rates were starting to spiral out of control, and you know that is when the state created the state reinsurance program, and so that's another thing that my department has been heavily involved in with the Maryland Health Benefit Exchange. They're going to go into more details about that program, but helping to monitor that program and monitor all the programs that help to stabilize the individual market is a very key part of what my department focuses on. Next slide, please. The other line of business that gets a lot of our attention is long-term care. You know, long-term care doesn't pay for medical expenses. It pays for helping you assisted living facilities or nursing homes or home health care to help you with your activities of daily living. These policies are priced much more like life insurance and health insurance. They required 50 to 60-year projections, and they're structured so that in early years, few people have claims. People generally buy these policies when they're in their 50s or 60s, and generally don't have claims until they're in their late 70s or 80s. And so these are long-term assumptions that were very sensitive to interest rates, very sensitive to a variety of other assumptions. And the industry in general missed big time back in the 80s and 90s when these first started being launched. Pretty much every assumption that they could be wrong on, they were, and they were all wrong in the same direction to underestimate claims. So this whole industry has gotten into a situation where claims are much, much higher than premium. And you know, quite frankly, you know, there's solvency threats to these long-term care companies, and there have been some large insolvencies like Penn Treaty and SHIP that is pending, and so for this market segment, you know, we have approved some pretty significant rate increases, but I just want to let you know that in Maryland we have a regulation that limits increases to 15% a year. So if we ever approve an increase over 15%, we require that it get phased in over multiple years. And as far as the rate review goes, you know, in general, for most other lines of business, we allow carriers to price to that modest profit. And if they've made a mistake in pricing, we let them raise the rates back up to profitability. But in long-term care, we're not really doing that. We're allowing carriers to break even at best for newer blocks. And for legacy blocks, the really old blocks, you know, it's at this point almost actuarially impossible to even get back to break even. And so carriers are being locked into losses on these older blocks. And so one thing to mention about both long-term care and the ACA market is that both of these are, we have public rate hearings. The ACA rate hearings are once a year, sometime in the summer. Long-term care rate hearings are every quarter. You know, this is while the filings are still open and under review. We have public comment open. Anybody can submit public comment on our website. Anybody can attend one of these rate hearings. And the companies come and talk about the driving factors of their rate increases. But it's also an opportunity for you or your constituents to voice any concerns or issues with the rate increases being proposed. And last slide, Andrew. And this is just some other roles that my department serves. The only one I'll mention briefly is we also look at the valuation and certification of life insurance reserve for domiciled companies in Maryland. That's probably part of the solvency review. But with that, I'll turn it back over to the next speaker.
I think we'll probably stop there. We have 3 more slides which you can access. The only thing I will say about these 3 slides, they will talk to you about, how to make sure your constituents can get help, the consumer assistance slide, how to go about filing a complaint. The other thing I want to point out is the constituent update. That comes to your mailbox every month. So every month you will receive in your official mailbox a newsletter from the MIA that tells you every place we're going to be, all the virtual stuff we have, bulletins that we've issued, so it keeps you up to date, but it's also something that you can, Tom Denoga, who is in the PC, the Prince George's County County Council, asked me for this, and then we pushed it out to everybody, because he can flip it directly to his constituents, and it's really helpful to them. And we're open to any feedback you have on how to make it better. We also point out a consumer email. It goes out about 30,000 people right now, but it's growing every month, that it goes directly to the consumer mailbox, gets about a 25% open rate, which is really good, but it also gives them where we're going to be, what are we going to do, here are your guides, here's how we can help you. And then you'll see the last slide that just gives you some of the idea of some of our resources and where you can click if you want to get more in-depth information on how to file complaints. So with that, I'm sorry we went over time, but happy that we were able to give you a taste of what the MIA does.
Well, thank you so much, Commissioner, to you and your team. I don't often gush, and I do see a few members have questions, but I do have to mention to the committee, I had the opportunity to be in a setting where there were regulators and commissioners from across the country and other legislators, and I have to tell you, our commissioner's reputation and good name just rang out the entire time I was in that space. So your knowledge and expertise, I just want to thank you for making Maryland look good and for assembling such a strong team. This was great information that you shared this afternoon, and I hadn't had a chance to tell you how proud I was of Maryland and to hear everybody just bragging about you, so I wanted to do that publicly and to thank you and your team. With that, I see Senator Kramer and then Senator Hershey.
Thank you, Madam Chair, and good afternoon, and thank you. Kudos as well. I second everything that the chair said about you, Madam Commissioner. Thank you for the good work that you are doing, and thank you to all of you for the great work you're doing for the folks in the state. I'd also like to give a shout out to Ms. Joy Hatchett, who I think everybody here on the committee could grasp, not only is incredibly energetic, but very effective. And it's been a pleasure working with you for a number of years. You get it, you understand what's going on, and you appreciate the value of your role in working with the good people of Maryland. So thank you for that. Couple of questions, and it's really, this issue, and I don't know whether we'll ever get to a resolution of long-term care insurance, which for a lot of our seniors in the state has proven to be a real ripoff. So many of our seniors who invested and spent for years, decades, to be, paying premiums, and then priced out of the marketplace because of the increases. And granted, we have an annual cap of 15%, but that cap quickly escalates over just a few years, and suddenly their rates double, they triple, and these folks who have been paying in all these years, then when they can't afford to pay any longer, they have to walk away from their policy, and they have lost their investment for all the premiums they've paid. I guess one of the things that I took note of in the slides is that the industry can be allowed to have a modest loss in their rate approval. Are any of the insurers in this area coming in and saying, yeah, we're going to accept a modest loss as our premium? And if so, what are the percentages? What are those losses? And what does it still translate into increases for the consumers? Can you give me, and if you don't have a handle on these things now, a follow-up would be great.
Well, we will follow up with greater detail. I'll just speak very briefly, and then Brad can give you a little bit more. But, Maryland has a reputation. And while there are lots of people at the NAIC that like us, if you go to the Long-Term Care Task Force, that would be the opposite, because we're an outlier with a couple of other states in terms of the approaches that we take in granting price increases, particularly on these legacy blocks of business. So yes, we do have carriers coming in with the rate increase where they're going to take 120% loss. So for every dollar that they've collected, they're going to pay out $1.20, and then plus, because they know that on those blocks, particularly if they have other healthy blocks and other business ability to pull profit from, we're going to make them do that. And, my team has a completely different approach to even what they look at in assets. So we'll participate in the national conversation with regard to like a rate plan. But, and we were literally just having this conversation yesterday about, Maryland's going to stand strong, and we're not going to change our parameters with regard just because, 27 other states have said they're going to go in a particular direction. We're not going to go in that direction. And we've been as effective as I think we can be with our consumers. We also, first of all, there are statutes in place where, with regard to many policies, where people don't lose all their benefit. They do get the benefit of the paid-up premium, so that doesn't go away. That's not everybody, but that's a lot of people.
It pretty much does. It was very limited. It was my bill that established it. It was my bill that established the requirement that they have the public hearings. I've never been able to get anything significant passed. The industry comes out and fights it tooth and nail, and then, the little dribs and drabs that kind of get down to the point of being meaningless get passed, but certainly nothing that was ever significant.
Well, and I do appreciate your efforts. We try to make sure that folks have glide paths, and we try to work with them to help them understand where there may be some benefits that are very high and drive costs that they might be able to pull back on because of their age or their situation. So that's at a high level, but yes, we do have carriers that don't come to us with a filing that says you're going to have an 80% loss ratio on the legacy block, because you're not going to get that. Whether it's here or later, I think Brad can probably give you some more statistical information about
Well,
what
and
that
can
looks
I
like.
ask you, because you opened up a little bit of a topic, and I was very pleased to hear you just speak the words. For a number of years, the commission took the position that if the company was underwriting long-term care and it was losing money, that they could not offset those losses by pulling from the profits of another area of profitable insurance that they would write. And I was told that it was prohibited. It was sitting at a hearing in this room one day when I said, please produce a copy of the statute that prohibits the MIA from being able to say, okay, you're losing money over here, your profits are astronomical over here. So rather than balance your losses in long-term care insurance on the backs of the consumers, pull those profits from life insurance that are astronomical and offset your losses so that your books are balanced and we don't have this risk of insolvency, and you, the industry, absorb your miscalculations when, you did, your calculations, your actuarials, so that it's not balanced on the backs of the consumers, the seniors. And I was constantly told that by law couldn't happen. When I asked to see where it was in statute, turns out never got a thing. When I followed up, the response I got was, well, maybe it's not actually there. So you're referring to the fact that profits can be pulled from elsewhere is very refreshing to hear. And I guess that begs the question, why don't you just require that Genworth, if they are having incredible profits on the life insurance side or property casualty, whatever else they write, offset their losses at their expense rather than the consumer? Do you follow what I'm trying to be
No, I
clear.
do. I hear you, and we should have a lengthier conversation about this, right? Because it is going to depend on business entity, et cetera, to some extent. But what I can tell you is, and there's a $9 billion gap in Genworth, because we watch that like a hawk at the NAIC, because we do not want to see it become SHIP or become Penn Treaty, because consumers really lose at that point. But we do, at least at the MIA, we are not shy about requiring companies to take significant losses on books of business. While we're not directing them to take profit from an area, it's sort of their job to figure out where that money comes from in the long term.
All right, maybe we can continue to engage in the conversation. One quick other question, Madam Chair, while I have the chance. Would you just follow up on the issue of dog breed specific bans or prohibitions within property and casualty underwriting? There was a time when you all produced a list of those insurers who did have breed-specific limitations, and is that message being communicated to policyholders, which I believe is required, so that somebody who might not realize they have their insurance and they also have a dog that's banned by their insurance, that then they have a claim on something entirely unrelated to the dog, but find out they may not get coverage because their policy was prohibited, and then it can be terminated because it turned out they had a breed-specific dog.
Yes, so we can certainly follow up, and I would encourage that last scenario that you mentioned of a carrier denying a claim that's not related to a dog based on a dog exclusion. That should come to us, because that won't fly.
We'll turn that around.
That would,
We had an example where it did happen a few years ago, which then heightened my concern with regard to the issue, and I'm just, haven't looked into it for a few years, but it occurred to me, I'm just curious to see what the latest is on the issue.
on the notice requirement, the law does still require any carrier that has a canine exclusion to notify the policyholder at inception and at each renewal.
Good, great, thank you. Thank you again very much for all you do. Appreciate it.
Thank you.
Thank you.
Thank you, Senator. We'll go to Senator Hershey and then Senator Lamb. You're on deck.
Thank you, Madam Chair, and Commissioner Bray, thank you as well for bringing a very informed team with you. Mr. Barron, you had mentioned some important P&C policy topics that we'll be likely looking at this year. Number one on your list is cannabis, so obviously we're going to be looking at the impending legislation on how we're going to, legalize that and make that available to individuals. But one of the big questions that we continue to hear from a commercial side on commercial policies is the insurance aspects of businesses, either through P&C or maybe general liability, and maybe you can talk on each, but how they are going to have to handle marijuana being legalized and the effects of that on their employees when it comes to potential damage through either driving vehicles or work sites or things like that. I wonder if that one is something that you will all be regulating or looking at, but more importantly, is that something that you can advise us on how other states are handling, again, commercial general liability and P&C?
So we are involved with monitoring, and have been for a number of years now, the myriad of impacts on insurance related to cannabis, from just, medical use to recreational use. And it is certainly a constantly developing space. One of the key factors for any of the entities that are the purveyors of legal cannabis is the availability of coverage for their property and casualty needs. And currently, across the country, that's mostly provided from what we call the non-admitted or the surplus lines market. The admitted market has not yet gotten heavily involved in that space, largely because of the banking concerns, because despite cannabis being legalized in states around the country, it is still a federally prohibited substance. And so until the federal government does something about that, and in particular opens up the banking regulations for those purveyors, it's hard for the admitted market to jump in. But we will continue to, and there are resources that we have. The NAIC has a white paper that came out a couple of years ago and is about to be updated. So we can make any of that stuff available to you. And if you have other specific questions on cannabis, just reach out and we'll be happy to respond. Kathleen?
On the liability side, which I think you were asking about, that is not something that the MIA would be involved in. Policy forms, address sort of covered liabilities. And so, we would not be getting into through insurance whether or not an employer becomes liable or responsible, et cetera. When we begin to look at exclusions, we'll look at what exclusions the law allows to happen, and I would expect the framework, at least early on, may follow what you've seen with alcohol use, but the MIA doesn't address the liability of the employer or the liability of the business. We would only be looking at the forms and the rates surrounding insurance coverage that they can acquire for any liability that they incur.
Right, that's what I wasn't sure of. But can you explain the exclusion parts that you were talking about?
So there are times when a policy can exclude, and it depends on the type of policy, it is, and whether you can buy the coverage separately under a rider. So if you're looking at, whether there's a circumstance, whether the policy may exclude a driver who, I have to struggle with it. Go ahead.
Yeah, no, so I think what the commissioner was trying to say is that liability exclusions are specific to whatever the line of business might be. There aren't really, in most, I won't say 100%, but in most, like personal liability policies that you would get, your homeowner's insurance, for example, there are not cannabis-specific liability exclusions, just like there's not alcohol-specific liability exclusions. So if a homeowner is negligent in the use of whether it's cannabis or alcohol and they get sued as a result, there's some liability coverage that is likely there. It would bar intentional acts. But that's a developing area, and it's more a developing area in the law rather than insurance contracts.
So we're going to have to address it, I would imagine, in the law on how I guess what the liabilities of a business could or may not be. And, will businesses still be able to drug test, or if they're required by policies to drug test? And then, if this then is a legal substance but still has the ability to impair somebody, how claims might be, evaluated if those conditions, whether they are or not, are not met in cases of accidents.
Yeah, I mean, in the world of alcohol, and you have the hospitality industry, there's liquor liability policies that are available. Not sure what the perfect analogy of that will be in the future. Maybe, you know, in states where recreational cannabis is allowed, and there are, you know, cannabis lounges. Maybe there will need to be some sort of cannabis liability product developed to meet that market. Right now, that doesn't necessarily exist, certainly not in the admitted market.
Okay.
Yep.
Well, I'm sure we'll continue talking about that issue, but I appreciate your input. Thank you very much.
Thank you, Senator. We'll go to Senator Lamb.
Thank you. Thank you. And Ms. Brain, good to see you again. Thank you for bringing your entire team again this afternoon. So I have an interest in kind of mental health parity, kind of given the medical background. I know there are some folks that previously had served on this committee who also have some interest in mental health parity. This is kind of a compilation of questions I'm bringing together pertaining to mental health parity. It was part of the presentation as well. It sounds like there's been information that's been submitted by insurers to MIA. And I think what we were trying to understand is, are, one, these insurance companies submitting their reports on time? And two, have you found that they have been more or less accurate up to this point? And I know it sounds like there's some still analysis going on with this data and a report coming forward in the next perhaps few months or later this year. But is there anything that you can tell us about this data so far? And has the agency had to hire consultants to review these reports up to this point in time?
So I'll answer a couple of those questions and then turn it over to Associate Commissioner Cooney to get, you know, sort of into the weeds on what they're seeing so far. So at a high level, the answer is most companies, so companies had to submit multiple reports because they had to tie that to plans. And so most companies were compliant in submitting the right number of reports, but there were several that weren't. Now, some of them we were able to kind of work through and understand what their mistake was, and so we didn't take regulatory action with respect to them. Others, we imposed fines because they just missed the boat. And so we issued orders and we issued fines because they hadn't filed them. We have a team that's gone through in details all the reports. Because this is the first time through, we are giving them a little bit of grace, you know, with the 30 days, sometimes 6 weeks to, like, we issued an 80-page letter of questions about their data and their information, because these are very data-intensive reports. And we'll have that particular company has to have their response in by the end of this month. So we're giving them that little bit of extra time to get down into some of the details that we didn't feel like they provided. If they don't, you're going to probably start to see some fairly significant fines come out if we're not getting what we want, because we're giving them one time through because it's new, and then we're done with this conversation. And then the analysis, David can talk about, but the answer is yes. We've had to hire consultants. I mean, we put an RFP out, nobody responded to it. We've gone out, we've had jobs postings for people to help us do this work. We did not receive anyone who actually was qualified to do it. We've been very fortunate in having relationships with people like Dr. Harbin, you know, who is a national expert in this area, who has been, you know, has done so much with his time and his talent to help us get to the right set of questions, and then has helped introduce us to graduate students and, you know, people who are a little bit more experienced that we've been able to hire for as many hours as they're willing to give us to do this work. So we have a team of 3 people that are contract employees that are doing a good bit of the work under the guidance of Associate Commissioner Cooney and some of his staff members. I would like to be better staffed. And in my budget request this year, people will see requests for PINs to be able to hire folks at the higher price point who are data analysts who can help us keep pace with where the industry is going. So, you know, I've made that request, and hopefully we'll have that request granted. But that's the procedural stuff, and then Associate Commissioner Cooney can talk to you a little bit about the data.
Sure. Can I have a follow-up question about the PINs real quick?
Absolutely.
So you've made requests for additional PINs, and
Yes.
those were not granted?
No, they're in the budget this year.
In prior
So
years,
they're
I
going to come
mean.
up this year for the next year's budget. And, part of MAPIA is part of what drove that, right? And our work on algorithmic bias and the fact that I need folks who are data analysts to be able to keep
Got
abreast.
it. So you're
of
talking
what-
about pins for this specific topic area?
that
You're
they
making it for
include
this
pins for
okay.
this specific topic here. I asked for 9 pins, 2 of which I believe are for life and health to do MAPIA and network adequacy analysis.
Okay.
Thank you, Senator. So yes, as the commissioner mentioned, there were, I believe, 3 companies who, they were late filing reports and just completely missed the boat, so we did issue consent orders. One of them was a larger carrier, and it was a 6-figure penalty just for not filing the report timely. Across the board for the other carriers, it's been very disappointing, the level of detail we've seen in the reports. We took a lot of time building up to this, putting out very comprehensive instructions and guidance on what we needed to get a complete analysis. And frankly, what we've seen so far, we have not gotten that from any of the carriers. And that's why we're, as the commissioner said, each one of them, we're trying to give them one shot to give us the information we need. If we don't get it, it'll be another order for, not for a violation of MAPIA, just for failing to file complete reports. And the statute directs us to consider that a significant penalty. So it'll be high penalties there also. I can say, from what we've seen so far, we have not identified any just blatant MAPIA violations where we can just see right off the bat that this is clearly a parity violation. It's really been an issue of just the companies not sufficiently documenting their analysis. And unfortunately, Maryland's not unique to this at all. It's national. When we discuss the issue with other states across the country, they're all seeing the same thing. I mean, MAPIA has been the law for more than a decade, but the guidance from the federal government on how to do this non-quantitative treatment analysis was very slow in coming. And the Fed specifically, they issued a report, I believe, at the beginning of this year, or 2022, where they made MAPIA enforcement a high priority this past year, and their experience was also the same. The reports they're getting from the companies, even though the law says you must conduct this analysis, you must document it and be able to provide it to regulators, the industry was just clearly not prepared for it at this point.
Okay. All right. Well, thank you for that update. On a separate issue, we've been contacted by some infusion companies who have all expressed kind of similar concerns, where they have been going through kind of a feedback loop of prior authorization and not being able to get paid. And so for these infusion companies, they receive prior authorization from the insurers, and they go through the infusion with the patients, and then they seek payment afterwards, and they're being required to resubmit prior authorization. If it's above a certain amount, even though it was already authorized, they're being required to resubmit it again, and they're being delayed in their payments by Care First, who's being named specifically in this instance, by several infusion companies. And so my question is this something that you're aware of? Is this something that we can see if there's additional help that can be provided to some of these infusion companies so that they don't have to continuously go through this in order to get paid?
So my staff has not made me aware of that particular issue. I have not heard about it. I would just look over, okay, yeah, so it's not an issue that's been brought to our attention yet. I would certainly like any of the providers who are experiencing that, if they could file a complaint with us, we could certainly look into it. I mean, if it's truly pre-authorized care, the law prohibits being denying reimbursement if the care has already been pre-authorized.
Yeah, and actually, just tell them to email us.
Sure.
Okay.
Like after this, or, just get us in contact with them. We'll help them file a formal complaint, or we'll just move right to market conduct depending on, we'll investigate and see what it is, but, don't
Okay.
pay $200, don't worry about it, just go right to go. And we'll get in touch with them.
Got it. Okay. So I can follow up and maybe put them in touch with you?
Absolutely, just send an email with a contact point, we'll take it from there.
Okay. My other question pertains to PrEP, which is pre-exposure prophylaxis, which is a very effective regimen of medications to prevent someone from contracting HIV. And I understand that there's a lawsuit going on in Texas to carve PrEP out from under the Affordable Care Act, because under the ACA, PrEP and that regimen of medications would be fully covered. And they're trying to carve PrEP out from ACA's cost share rules. And so they're trying to do so under a religious exemption requirement. the concern here is that if this goes through federal courts, do you see that there is some way to be able to protect Marylanders from the effects of this type of a lawsuit?
I don't know that we can ever protect Marylanders from a lawsuit, but what you can do as legislators, and what often has happened in Maryland, is that you have passed laws that are consistent with the federal law, so that if the federal law fails for any reason, Maryland has it as a law. And I think that has always been a very effective mechanism to assure that those policies and principles that are ensconced in federal law don't go away because a court at some point says they're not enforceable.
Okay. Well, I would urge you to kind of pay attention to this case,
Yeah,
because
absolutely.
there's certainly some implications and concerns that could stem from that. The other piece of this is that we've also heard that in North Carolina, there's also a similar fight going on with PrEP, where Blue Cross and Blue Shield in North Carolina is putting PrEP on higher tier cost sharings. So requiring that there be greater cost sharing. So I guess something called adverse tiering that you're probably familiar with. And so there's a lawsuit that's now in place against Blue Cross Blue Shield in North Carolina because of those actions that they're taking and placing it on a higher cost share tier.
So we will absolutely track those things for you. I will talk to both the Texas Commissioner, Commissioner Brown, and the North Carolina Commissioner, and see if we can get any intel from those departments, see if anybody else in the NAIC is aware of it. We'll take every action we can take in Maryland to hold the line with respect to those issues. But I will say that ultimately we don't control the courts, and Texas has been historically hostile, and the courts have been historically hostile to the ACA. So sometimes the best thing to do is, again, to make sure that Maryland has a parallel law with the things that, we don't want to see go away.
Are the carriers here in Maryland required to cover PrEP ancillary costs?
Yes, so as the Commissioner said, codifying federal law into state law, I think it was 2020, we went through an exercise the General Assembly did where a lot of the ACA requirements that were previously codified just through a cross-reference were explicitly put in the law. So the requirement for anything related to the ACA preventive services is now specifically in Maryland law. And it no longer refers to the federal law. It refers to those agencies that the same federal laws refer to as, like, if this group has said this preventative service must be covered, then it's now required under Maryland law as well. So because, I guess such United States Preventive Service Task Force is one of them, because they have a recommendation that clearly says those ancillary services must be covered, we have the authority to enforce that under the Maryland law.
So I assume that the agency, if there are reports that these ancillary services are not being covered, would proceed with enforcing the requirement on the carrier that they start cost sharing for these ancillary services.
Absolutely. And to date, we have not heard any of those concerns, but we would certainly take action if we became aware of that.
Okay, so if we hear of those concerns, we can forward those to you as well?
Yes, absolutely.
Okay. All right. Well, thank you. Good to see you again, Ms. Brain, and thank you, Madam Chair.
Thank you, Senator. I believe Senator Ellis has our final question or questions. Senator?
Yeah. Thank you, Madam Chair. I have one question to ask, and thank you for this very informative briefing. But I have 10 more I'll submit in write-in, okay, in the interest of time. So, not really well, so, so we can deal with that later. But the one I want to focus on is, Ms. Hatchett, you talk about your consumer outreach. And I have quite a few constituents, mainly senior citizens, who live in senior communities, and their rents are high, and they're on fixed income, and quite a few have to move. They've reached out to me, and I feel so sorry. It seems like the only thing we're left to do is for me to write a personal check to help them pay their rent, which I don't have enough money to do that with the amount of issues. So have you done anything with that? Can you do anything with that as far as educating these folks? Can you supply any assistance to us? Have you done that anywhere in the state? And thank you for mentioning La Plata, which is in Charles County. And the reference there was the tornadoes, right? That was in La Plata a few years back, which pretty much destroyed the town of La Plata. But with the help, your help, and so many others, we really built La Plata really to a nicer, newer community. So thank you for that.
Thank you. So we frequently go to the senior communities and talk all types of issues with them. We'll talk to them about renters insurance, or we'll talk to them about maintaining their homeowners insurance. But your question about what, if any, resources they may have available to help to pay their rent, I would say having them attend the call that we're going to have next week with 211, it's unbelievable the amount of resources and things that are available from 211. And what we could probably do is I could work with a member of your staff to figure out what we could put together in terms of a quick handout for them, and you could provide that, of some ideas and places that they could go for assistance with their rent. I mean, I know that different counties and different communities have different programs, and we could just maybe work together and see what's available.
Okay, so thank you so much. So you'll reach out to my staff with that?
Absolutely.
Before this 211 call next week?
Yes.
Okay, thank you so much. I
You're
appreciate
quite
that.
welcome.
Thank you. Thank you, Madam Chair.
Thank you, Senator, and thank you so much to the panel. Again, Commissioner, thank you for your leadership, and to the members of the committee. The Vice Chair pointed out, and certainly want to remind us all, they put a lot of valuable information in the back of the packet, including, for me, a glossary. So thank you for that, and we look forward to our continued work together. But thank you. Have a great afternoon.
Thank you. Our pleasure.
We're going to turn to the briefing from the Maryland Health Benefit Exchange, and to our audience and to the members immediately at the conclusion of the question and answers. At the end of that portion of our briefings, we'll ask our audience, our guests, to leave the room. We're going to have some work with office information systems with our staff. So we'll do this briefing and our Q&A, and then we'll ask our guests to enjoy the areas outside of the hearing room. So we welcome to the briefing our Executive Director, Michelle Eberly, and you can introduce whoever you've brought with you or have them introduce themselves. Good afternoon.
Good afternoon. So thank you, Chair Griffith and Vice Chair Klossmeyer, and committee members, old and new, for having us here today to give you a briefing. With me, I have my Director of Policy and Plan Management, Johanna Fabian Marks, and we also have our Health Policy Analyst, Amelia Marcus. So you'll be seeing all of us quite frequently. For new members, I'll give a little bit of briefing about the exchange. We are a very small but mighty independent unit of state government. So we're a little different than the MIA in terms of our governance. We're not a cabinet level agency. We are governed by a 9-member board of trustees. 3 of the members of that of the board are there based on their role in state government. So we have the Secretary of Department of Health, we have our very own insurance commissioner, and we have the executive director for the Maryland Health Care Commission. And then we have 6 other members that are appointed by the governor to serve on the board, and those are 4-year terms. They can be re-upped for 4 years. So it's very important for us with our governance body that we have makeup from around the state. And I'm really pleased to report that we have, of those 9 members, a lot of geographic diversity, cultural diversity, and gender diversity. So that's important. We really want to make sure that our agency is governed by a true representative of what Marylanders are. We have been here since April 12, 2011 was when the Maryland Health Benefit Exchange Act was initiated. That was under Governor O'Malley at the time, and we've continued through that time to really have some amazing successes. And for those of you that were around way back when, we had a little challenge getting up off the ground, but since then we've come through to really be stellar and top-of-the-nation exchange. So our mission is to make sure that everyone in this state has affordable, quality health care. And we look at the full parameter of health care that's available to our consumers. We have, as you heard, there's a lot of folks that are covered through employer-sponsored health coverage. What we find is that we have a lot of consumers that even though they're employed, they may be employed working 1 or 2 jobs, and they don't get health coverage. And so then we have to look at how else in our state do we provide health coverage. So we have the employer-sponsored coverage market, we have federal government health insurance, then we have Medicaid, which it runs through the exchange. And then we have Marketplace, what we call Marketplace, which is private commercial insurance. And of course, then the other way that people get insurance in the state of Maryland is through Medicare, which is for seniors, those above age 65. CMS has now, since the introduction of the Affordable Care Act and the creation of exchanges, they're now referring to the 3 M's. So they refer to Medicare, Marketplace, Medicaid. Those is the 3 M's, and we fall into that spectrum. Just some of our successes since we started way back when. We've cut the uninsured rate in Maryland in half. We have had really great success doing that. However, our work is not done. We know that we currently have 363,000 uninsured Marylanders. What's of interest to note for this committee is that about 133,000 of those are undocumented individuals in Maryland. So they may be here working, paying taxes, but they're not able to get health insurance through the exchange or through other measures or with any assistance. We were the first in the nation mobile application end-to-end, where if you're getting Medicaid coverage or commercial insurance, you can get it right through your phone. The backbone of the exchange is our technology, and it is what we refer to as our platform, Maryland Health Connection. And if you're not familiar with it, you can go online, you can use your mobile phone, but we have lots of ways that you can access Maryland Health Connection, which is our online portal. Also, first in the nation, we did the tax time easy enrollment, another way to get people right at, as you've heard already, at the point of where they are and where they need coverage. When people are filing their taxes, if they don't have health coverage, they can check a box. We'll help get them covered. Likewise, we did through the Department of Labor, when you go and submit your, for unemployment taxes, or unemployment insurance, rather, you can check that box and we can help get you covered. So those are some of the successes. We wear 2 different hats. I talked about the private commercial insurance and Medicaid. So all of the Medicaid enrollments for eligibility enrollment come through Maryland Health Connection. And with that, we have about 1.4 million Marylanders that come through our system, just in Medicaid alone. Since coming on to Maryland Health Connection, we are now second in the nation for Medicaid application processing within 24 hours. First quarter 22, this is just recent information, national average was 52% for Medicaid enrollments within 24 hours. That's a national average, 52%. We're at 99.7%, and we've been that way consistently once we started enrolling Medicaid into Maryland Health Connection. So you'll see that not only in the private commercial space, and we just finished our open enrollment, so for new legislators, we do an open enrollment for private commercial insurance. It starts November 1st and runs through January 15th, very much like employer insurance, where you have a time period to get your health insurance. We just completed that open enrollment period January 15th. I'm proud to say that once again, we've had our highest enrollment ever. We have about 182,000, over 182,000 folks. And when you look at the small or the individual group market in Maryland, the total market is about 250,000 individuals. We now have over 182,000 of those that come through Maryland Health Connection, the state's marketplace, and the others go direct to the insurance carriers, whether it's United, CareFirst, or Kaiser Permanente. So we're pretty pleased with that. Just some other successes, and I may not be in line with the slides, but we'll cover everything. We've done a lot over the last several years to really increase our presence and utilization of our insurance producers or insurance agents across the state. So for those of you that have been here for a while, you may remember that when we first started the exchange, there was some contention from our insurance broker community that they did not want us to replace them. You know, we don't want the exchange to be a threat. So we've worked really hard over the last 10 years to say, no, we're your partner and we want to bring business to you. We believe this year the reason why our enrollments for those that don't need any financial assistance on the exchange are higher than they've ever been is because of that relationship working with our insurance producers across the state, where we've provided them with direct access during open enrollment, which we call our BAT phone, broker assisted transfer, bringing, in fact, on average, the folks that participated got 136 warm leads, already determined eligible for insurance coverage, and now we're bringing that business to an individual broker. Likewise, we've now put on our app and online, get connected within 30 minutes, so you can say, I want some help from a license. And these are licensed through the Maryland Insurance Administration, so these are professional experts in this area. You can say, I want contact, and we do a round robin with our insurance producers, and they are required within 15 minutes to get back to that person and provide health coverage assistance with that person. So lots of ways. Those are really some great things. We've done a lot with our direct messaging, and when we're trying to look at what we do with how we address public health issues in this state. During COVID, we were actually really able to help in getting messaging out about where to get vaccinations, partnering with the Department of Health. We have our marketing, we call it our marketing portal, and that allows us to do a lot of information about, here's your preventive screenings. Hey, you're going to turn 50 next month. Go get your colonoscopy. We want you to have that preventive. School's coming up. Do you have your physical that you need for sports camp? Did you know immunizations are free? So we get to use that through our marketing features. We'll start to see now a big shift from open enrollment into the end of the public health emergency. And with the public health emergency, as you may or may not know, folks have been not terminated from their coverage on Medicaid, even though they may now no longer qualify for Medicaid, but part of the federal public health emergency is that you can't be terminated. We really didn't want to lose people. So now beginning May 1st of this year, we will be able to start instituting those terminations. The big concern nationally and with our new governor and with the exchange and everyone who's dealing in this public health space is that we don't want to lose any of these people. We've had the largest number of folks put into Medicaid during this COVID. We ran a COVID special enrollment period over 2020 and 2021, and our numbers just skyrocketed in Medicaid, and we don't want to lose those people. So we're working very closely with our Department of Health. We will be using all these sources that I talked about to directly outreach to consumers and make sure that if they are eligible for Medicaid, we're making sure that renewal continues. If they're no longer eligible for Medicaid, we're going to get them into a qualified health plan if they're eligible for that. And of course, if they age out and they are ready to go into Medicare, we'll work to make sure they get into that pathway. So that's very important and top of our priority. Just one little thing, I'll give you an update on our what I said, we're small but mighty, and I mean that. We have 67 state PINs. We're a very small agency. We have a budget of at $32 million, which we'll be coming back asking for some additional funding, which has been reduced over the last several years. But anyhow, so for that $32 million of funding that comes through the premium assessment tax, and we, at the end of the year, if we have any money left over, it goes back to the general fund. But for the over 1.5 million people that we serve, we do that with $32 million of state funding. That equates to about $23 a person. And that's for everything we do, we have our HR department, we have finance, we do lots and lots of procurement, our information technology, again, which is the backbone of us, marketing and outreach, our compliance department, consumer assistance, and our executive office. So we have 67 PINs. We do also have about 150 contracted IT professionals that do all of our building. And we have a unique model at the Exchange where we actually manage all those people. We don't have, you'll hear reference to like firm fixed contracts, big agencies like Deloitte, et cetera. We use small businesses in Maryland, and we have about 114 what we refer to as master vendors. And from those master vendors, we get individual resumes, and we hire the people through those vendors. But it's a way not only for us to really support small businesses, particularly minority-owned businesses, but make sure that we really have direct control over this staff and being able to help. So I think I will stop there in terms of kind of the overview of what we do and who we are. Maybe I'll just add that for Medicaid services, because it gets a little funky, we work, the Maryland Department of Health is the state Medicaid agency. They do all the policy work on Medicaid. They oversee and work with the local health departments. We are the eligibility enrollment engine through Maryland Health Connection, so they run through our system. But part of that also includes, we do all appeals and grievances for anything that comes out of Magi Medicaid. We have our call center. We handle all the calls for enrollment. We do all of the work with the MCOs and with the insurance carriers to get data back and forth and a lot of reporting. We print the ID cards, we do all the fulfillment. So there's a lot of work we do on behalf of Medicaid. So in addition to that $32 million of state funding, we also get $40 million from the federal government, direct from CMS, to pay for that Medicaid work. The state portion of that match for that Medicaid work, the Exchange pays for that. So that's where all that money is used. And in addition, we give $10 million worth of grants to our connector entities who are our boots on the ground out in the field. So I will stop there and hand it over to Johanna, who's going to talk a little bit more about some of our specific things that are coming up.
All right. I think Michelle did a great job talking about our highlights, so we can probably just skip to a few of our particular affordability programs and enrollment initiatives that we wanted to share with the committee, as you'll probably be hearing more about these in future sessions. The first is our state reinsurance program. Brad with MIA mentioned this previously, so I'll go into a little bit more detail here. As he described, prior to the ACA, the individual market was very different. People could be charged more for their, based on their health conditions. They could have certain services excluded based on their health. That changed with the implementation of the ACA. What we saw when many of those changes went into effect in 2014 and over the subsequent years, was we saw individual market rates increase. So essentially carriers underpriced in those early years, underestimated how much it was going to cost to provide this, to meet these new requirements, and had to raise rates by double digits from 2015 through 2018. That led to problems in the individual market as rates increased, enrollment declined, healthy people dropped out, the sicker people remained. It's not what you want to see happen in an insurance market. The state took action in 2019 to establish the reinsurance program, which stabilized, oh, is mine not on? Okay. Oh, got it. Okay, thank you. The state took action in 2019 to implement the reinsurance program, so the legislature passed legislation directing us to file with the federal government to implement the program. And so we got that in place in 2019, and it's been in place ever since. You can see in the chart on the right that immediately led to decreases in premiums, double-digit decreases for 3 years, followed by some moderate increases for 2022 and 2023, which was to be expected. We didn't anticipate rates would go down forever. Even so, in 2023, rates are more than 25% below where they were in 2018 before the reinsurance program was enacted, and we've seen enrollment rebound. So I'll go into a little bit more detail on the next slides. But first off, just kind of a baseline, how does reinsurance work? Reinsurance reimburses insurers for part of their claims costs. So we're almost insuring the insurers, as you would get from the term reinsurance. When costs are lower for carriers, they can, of course, charge lower rates, and that's why we saw premiums go down. Our board, our 9-member board that Michelle mentioned, is responsible for setting the parameters for the reinsurance program, so determining the terms by which we pay carriers for their high-cost claims. And from 2019 through 2022, we paid carriers 80% of costs for any individual who had more than $20,000 in claims for a year, up to $250,000 in claims. So below, if someone never hit $20,000 in a year, the insurer was responsible for 100% of those costs. And once they exceeded $250,000, the insurer is again responsible to cover 100% of those costs. But within that window of 20 to 250, we cover 80%. That changed slightly in 2023. That threshold for the reinsurance to make payment fell to $18,500. So that's just at a high level how those payments are calculated. Next slide. And then just a little window into who's getting these payments. On the left, you can see a graph of the total individual market enrollment. About 94%, the majority in blue, never hits that approximately $20,000 threshold. Only about 6% end up having more higher claims that trigger reinsurance payments. However, that 6% in red, you can see on the right, account for about 2/3 of all the costs in the market. So of those 2/3, the reinsurance program covers half, and then carriers end up paying half themselves. So that 6% of individuals, high-cost individuals, accounts for 2/3 of claims. The total claims for 2021 were about $1.5 billion, and then the reinsurance program paid a little under $500 million out so you can see that the magnitude of the program and the impact it has on reducing carriers' costs and thereby premiums in the individual market. Next slide. So just as I mentioned, premiums are down. Here you can see the graph on the right shows that our lowest cost plans are about 25 to 30% below U.S. averages. We have the lowest cost average bronze and gold plans in the nation, and that's true in 2022 and again in 2023. Next slide. And then this shows, the slide shows how enrollment has grown since the reinsurance program launched. You can see in the graph from 2016 to 2019 that enrollment was declining, and since 2019 we've been growing and are just about back up to where we were in 2016. Overall, between 2019 and 2022, total market enrollment is up 22%, and on-exchange enrollment, which is a subset of that, but the majority of the individual market is up 25%. And then the last thing I'll mention is reinsurance funding. So where are these dollars coming from and how are we paying for this? The program is funded with a combination of state and federal dollars. The state funding comes from a state health insurance provider fee and assessment on health insurance premiums. That assessment was instituted for 2019. It replaced a federal assessment of 2.75%. So in 2019, the feds suspended that assessment and then subsequently repealed it. The state stepped in 2019 with a state assessment equivalent to the federal assessment, and then in 2020 reduced that to 1%, and that's in place through 2028 to continue to fund the reinsurance program and stabilize the individual market. So individuals didn't experience a net increase in premiums when the state assessment went into place. I just want to kind of make that clear because it was stepping into the place of that federal assessment that was going away. Federal funding, the other part of the equation, comes from what we call our 1332 waiver with the federal government. So just to back up briefly, the federal government subsidizes individual market premiums for people who enroll through the exchange so that individuals' costs are capped at between 0 up to 8.5% of their income. And the ACA allows states to waive provisions of the ACA, and if through that waiver, federal costs to subsidize premiums are reduced, those savings are passed on to the state. So it's ultimately budget neutral to the federal government, and the state benefits from any savings through a waiver. Reinsurance, as I discussed, has reduced premium costs. That has the knock-on effect of reducing federal subsidy costs. And so the state recoups those savings as a pass-through under the waiver and then turns around and uses those to fund reinsurance. So it's kind of a virtuous circle. The last slide gives a snapshot of funding under the program, and I'm sure we'll be talking more about this in future years. But you can see in the leftmost bar in 2019, the blue portion of the bar is state funding. You can see that was highest in 2019 when we had the 2.75% assessment in place, and then that declines in 2020 and future years when that drops to 1%. The green bar represents the federal funding, so you can see that's the majority of funding that we're getting for the reinsurance program. And then the red line indicates the cost of the program in prior years and then projected out through 2028. I will say that this cost is not set in stone. The board has the ability to adjust what the cost is based on the parameters they set, so they can take action to reduce the scope of the program as needed. And also, these projections assume that extra federal funding we're getting that's scheduled to end in 2025 will end in 2025. If the feds take action to extend that funding, this projection picture would change, and we would be getting more federal funding going forward. The dark colored line is our fund balance. So you can see in 2022, the red line starts outstripping the funding that's coming in, and as a consequence, we start drawing down on that fund balance in 2022 and future years. I'll also note, not shown explicitly in this graph, but in not last session, but the session before that, the legislature funded a number of programs out of the state portion of these funds and took out about $220 million to fund other programs between FY21 and 25. In addition, $30 million, and those programs were not kind of directly related to stabilizing the individual market. $30 million in addition was used to fund the young adult subsidy, which does go towards stabilizing the individual market. So that's a snapshot of the reinsurance program. We are working with MIA to submit a report to the legislature by the end of the year that will discuss in more detail projections regarding the program, thoughts around funding it, and suggestions for the future of the program. I'll briefly mention our Young Adult Subsidies Pilot Program. This is a program, just as background, the reason we're talking about young adults here is that they account for a significant portion of our uninsured, between around a third and 33 and 43% of our uninsured individuals. So those young adults age 18 to 34 are a big group for us, and if we bring them into the market, they're healthy, it's good for everyone, it helps bring down premiums. Pursuant to legislation in 2021, we launched a 2-year pilot program to provide a state-funded premium subsidy to reduce costs for these young adults, because what we have heard in survey data over the years is that the big impediment to enrollment that young adults cite is cost. That subsidy pairs with the federal premium subsidy to reduce costs on a sliding scale, with the youngest and lowest income young adults benefiting the most from the subsidy. And I'll just kind of note that we got this up and running in less than 6 months between when the legislation passed and having it up for open enrollment in 2022. So just a testament to our IT staff. Next slide. I'll skip over the parameters, but there's more information here if you want to understand the design of the program. Our preliminary 2022 data, we've seen 45,000 young adults benefiting at a cost to the state of a little under $14 million, and it's reduced their out-of-pocket premium costs by about 1/3. And we're continuing to analyze this data, and we'll have more to share. The last item I think I'm going to discuss in a little bit more detail is our easy enrollment programs. Michelle mentioned these. They're efforts to simplify and ease enrollment for individuals through partnerships with other state agencies, both established pursuant to legislation. The next slide goes over some background for the tax program we put in place with the Comptroller's Office. It allows individuals to check a box on their state tax return, and we will then reach out to provide assistance enrolling. We were the first state in the nation to do this. There's been a lot of interest. It's a very innovative program. And the state built on that. Just last year, we implemented a similar program with the State Department of Labor for individuals receiving unemployment benefits. Again, in their paperwork, they can check a box indicating they're uninsured and looking for coverage, and we'll reach out to assist. In terms of how these are doing, in the 3 years that the tax time easy enrollment program has been in place, more than 100,000 have checked the box, more than 10,000 have enrolled. In the just part of a year, the easy enrollment through the Department of Labor has been in place. We've had about 33,000 check the box and more than 3,000 enroll. So really pleased with these and hoping to build on these programs and continue making it easier for folks to get into coverage in future years. And I think I'll skip over the recommendations, but we did convene a work group that provided some thoughts on future directions for the program, and that was submitted this past December to the legislature.
And that is our presentation, and we are more than happy to take any questions.
Thank you both for that presentation. We have questions or comments from Senator Reedy and then Senator Lamb.
Thank you, Madam Chair, and thank you both for the presentation. Both presentations today have been great and very informative. I'll start actually with the last presentation that was fresh in everybody's mind. So the reinsurance program, I think a lot of people acknowledge, people say it's been a huge success, keeping rates down. The chart you've shown us is, concerning, looking at those numbers. Can you just, and if I missed it or didn't understand it, I apologize, but in this slide, we talk about $219 million removed from is that money removed from this fund, and where did that money go to?
Predominantly to support the Medicaid budget, and then some little bits to a variety of other health programs.
And we expect that to continue. Well, it is going to continue because it's through FY25 at least.
Right. Some of that money has been removed, and some of it is kind of allocated up through FY25.
Last year, there was legislation considering raising the assessment on the provider, on the insurance companies, I believe. We didn't pass it, but there was legislation considered to do that. Was that partly driven by this, or?
There was legislation to extend that 1%. It was set to sunset in 2023, and we need state funding to continue to be able to maintain the program past 2023. So the legislation continued that 1%, didn't change the number, but just continues it through 2028.
That's assessed on, that's not assessed on everyone though, right? It's assessed on HMOs, or is it assessed on all providers?
It's assessed on pretty much all health insurance.
Okay.
And just to clarify too, though, on that, taking money out of that, there was legislation that last year that put some guardrails around not being able to use funds out of that reinsurance fund.
Okay.
Correct.
That's
And,
right.
and
Okay.
part of the reason was because we were getting such healthy amounts from the federal government, there was a lot of reserves in that fund, and it just became an attractive piggy bank, and it, it looked like there was extra money, but there really wasn't, because we knew the federal government would start to wind down.
So theoretically, if we stopped the borrowing, or at least limited it a lot more after FY '25, we could see this chart get a little less scary, or?
No, that reflects
That
where we have,
reflects-
yes.
Okay, all right, that's good to know, thank you, something for us all to keep in mind. Then if I could pivot to thank you so much for your presentation, a couple things that you mentioned as we were talking about Medicaid and how we were getting expanded Medicaid coverage during the pandemic, but now it's being pulled back. That you said about 1 in 4 Marylanders is on some form of, has get some
Correct.
kind of assistance from Medicaid. What is the bottom line number as of this year if we lost, when we lose that federal government backing?
So we're working through all those numbers right now, but we believe it's around 80,000, I think is the final. There's different little discrepancies of those numbers. The numbers we've come up with is about 80,000 that would roll off.
People, 80,000.
People, correct, that we'll
ratepayers,
have
okay.
to make sure we've got them covered.
But if we, when you say we've got to make sure that we have them covered, you mean your goal is to try to find alternatives for them that are affordable so that they can pay some or pay for it or maybe be
Right,
eligible for a partial
and get them
subsidy?
into qualified health plans.
Okay.
Yeah.
Okay. And you mentioned, we were going through the number of uninsured we have in the state, and that, you had a number for that.
It's about 363,000 is where we're at right now.
You discussed undocumented, is that part of that number? How many of that number is undocumented?
About 133,000.
Okay, so about a third of it, okay.
And just to let you know, we get these numbers from, there's an American Community Survey that does an assessment and evaluation, and they make projections on how many people are uninsured in the state. So it's not an exact science, and that's one thing that, as the exchange, we've looked at, is there something that, from a state perspective, we could do a little more timely and get more information. So it's something we're looking at, because there is a lag in it, and it's not an exact science, and yet we rely on those numbers a lot.
Of course, understood. And I can tell you, I've been here since the beginning of the exchange, and I was around when there were some problems, and I think it's obviously, the execution has improved dramatically, and I appreciate your work and the work of people before you as well to try to get a lot of problems we had straightened out. We're not having the kind of technological issues we had back then, correct? We're not seeing
No,
the
in
issue
fact,
with-
4 years in a row, we've won a CIO 100 award, which is a national award for the innovation in our technology and service delivery.
That's great. Just in closing, I guess I'll do an isn't that so question. If we're discussing budget surplus at the state level, budget surpluses, we should probably be sure that if there's issues with programs that we know are successful, like reinsurance, that we look at that before we maybe add new things. Let's be sure we've shored up the stuff that's already working to address uninsured. I think that would be maybe a good idea. Isn't that so? Or, I won't put you on the spot. Thank you very much.
I was waiting. Thank you so much, Senator. Senator Lamb.
Thank you, Madam Chair. Ms. Everly, good to see you again. Thank you for your team for being here this afternoon as well. I am concerned about the redeterminations that are coming through. I mean, we went through during the pandemic, obviously a really challenging health period, probably the greatest reduction in the number of uninsured in our state. And now with the winding down of the pandemic, the subsequent concern, as we've been kind of touching on, is perhaps the largest number of people being thrown off of our Medicaid rolls to become uninsured all of a sudden. And that number could be significant, as you mentioned, up to 80,000. And that's a lot of people all of a sudden that would be thrown off health insurance and all of a sudden be uninsured. Is that 80,000 number that you estimated based on folks that before you're able to try to find them into qualified plans, or is that what you anticipate even after you've maximized the amount of subsidies and help that you're able to provide to them?
And I want to caveat that because we're still working through all these numbers, we're looking at them. And and you were in the meetings as well, so correct me if I'm wrong. If I remember correctly, those are ones that we could get into other insurance.
Yes, so the number Michelle is speaking to is individuals who, based on the most recent information we have on them, look like they're over income for Medicaid. They would still be eligible if they need it for coverage in a private plan through the exchange. So what we're focused on is making sure that there is a clear transition. It's very easy for them to transition from Medicaid to a plan on the exchange, and, that we don't lose anyone to become uninsured.
And I will add, if I can, Maryland has been unique because we have the exchange and we have an integrated system between Medicaid and QHP. We never stopped doing redetermination. So other states have done nothing for 3 years. They've just kind of let things ride. We've continued to do those redeterminations every single month. Now, what that means is we didn't terminate anyone, but we sent them notices. We said, if you have a new email address, a new phone, come back, update us. So we're better off in that we have current information. We also, because we have email address, phone numbers, mail address, so we've been doing that texting and email campaign. So we have a lot of ways to reach out, but I will tell you, we are doing everything we can to make sure that one, we want to auto-renew people. So we're looking at the biggest area where we get hang-ups is on income verification. So we're looking at additional ways to verify income through Equifax, which now Maryland has 70% of employers reporting payroll information. That's like as of the last payroll. That will help. We're using some robotic automation to look at pay stubs and make sure we get those approved if they are warranted. And then we're looking at how we can, like California does, do automatic enrollment if they roll off of a Medicaid plan but are eligible for a qualified health plan, how we can automatically enroll them into that qualified health plan. So we've got a lot of balls up in the air, but our goal is to have these all in place by the 1st of April, or May, rather.
Which is soon, which is very soon.
Very
I guess my concern is even without the precise number, there could be tens of thousands of Marylanders all of a sudden becoming uninsured because of this. And that's probably, that range is probably fair to say that we're talking about the tens of thousands of Marylanders that could fall under this umbrella. And so, my second follow-up to that is concerns children. And so there are a lot of children that also have been able to get coverage through the program, through this expansion. And, just looking at some of the numbers here, it looks like, and these are national numbers, that maybe 3 out of 4 children that gained health insurance over the pandemic period could be losing that because of these redeterminations, even though they remain eligible in some fashion. And that these children that could be affected are more often children of color, folks that are already facing a lot of other social, economic kind of challenges that could also be at greater risk of being disenrolled. And so my concern is making sure that we reach out to these pockets and individuals and families and folks that would may not be easy to quite access with the text messages, the other means to be able to reach, to make sure that they follow up and get their information in. I guess by extension from that, there are other states that have looked at other means to, look at income fluctuations over a 12-month period and try to apply for federal waivers where if there are income fluctuations that bring them below certain thresholds, that's not looked at as an immediate reason to be able to disenroll them, but that it's taken as an average or of a yearly income look-back period so that those fluctuations below the threshold, even during that time of the year, don't automatically disenroll somebody. Is that something that Maryland has looked into, or is that something that we would be considering?
Well, I can tell you from the exchange perspective what the discussions we've had, and I just want to caveat that Maryland Department of Health and the Medicaid, State Medicaid Agency, they set the policy decisions on this. I just had a really great discussion with our new incoming Secretary of Health about this and about looking at the different income levels. That is why we're talking about using Equifax data and labor, Department of Labor data, and IRS data, so that we have multiple sources. But Senator Lamb, to answer your particular question of, are we looking at over a period of time versus this one date, the Equifax is most recent current information, labor is a last quarter information, and then, of course, the IRS is a year-long, a year-back look. So there's three ways to look at it. I don't have an answer for that question, but we meet with MDH weekly, and I'll make sure that we raise that question with them.
Okay, because I would be interested in, we could certainly file legislation to make that a policy requirement. You're saying that that's something the department would, because it's a policy question, would have to come from the department, and you're waiting on further information or guidance from the department when it comes to that piece.
Correct. And we're having very active discussions about it, but we just don't have the final answer yet. From an operational standpoint, I can tell you, the exchange is prepared to implement whatever policy decision is made.
Okay. And for that last piece, I was talking about it for kids, but it looks like other states, for example, I think Illinois, has even extended this to adults as well, the 12-month continuous eligibility for adults that are enrolled in the program. Is that also something the state could look at?
Actually, we are doing the 12-month continuous for children. Yeah, we are, Maryland is doing the
You are doing it for
12-month
children,
continuation for children. That decision has been made.
And it's already been implemented as well, or?
It's in queue to go into production, so it will be ready.
And then what about for adults then?
I don't know
That-
the answer.
I guess that's a pending question.
Yeah.
I think that's a
Yeah.
policy decision again for MDH.
Okay, all right. And then last question pertaining to the state-funded premium subsidy, where you were saying that this was to help younger people get health insurance because a lot of them are not enrolled in health coverage. And you're saying that it costs the state $14 million. Is there overall also cost savings? Because we're also getting more people enrolled under coverage, which is increasing the insurance pool, right? And these are generally healthier people because they're younger individuals.
Right.
Is that taking into account the cost savings from getting more young people insured, having them contribute to the risk of the overall insurance pool?
We are still evaluating those numbers with the MIA. We know, unfortunately, the insurance market is very fluid, so you have people coming in, people going out all the time. They get employer-sponsored coverage, they go to that, they'll come in and out. I can tell you where we are looking at this is through really a health equity lens, because where we've seen really good growth, and in fact, this last open enrollment, our young adult enrollments for our Hispanic population were up 13%. So we're really dissecting where we see this benefit, and we've really seen, when we look at health equity among all groups, we're seeing the young adult subsidy really impacting some of our underserved communities.
So the 14 million that it's costing the state, it actually in a way there should be an asterisk saying that there are also potential cost savings as
Exactly.
well, because you're getting younger, healthier people into the insurance pool.
That's correct.
Which is actually helping bring everyone's premiums down overall.
That is the general rule, that you have younger, healthier people, it offsets older, less healthy people, or people that just require more
So
medical
the 14
care.
million is the pure cost, but there's savings that aren't taken into account in that.
That is correct.
All right, thank you. Appreciate
Thank
it.
you, Senator. Whew. All right, we have two more questions, and then we do have this training, so we want to make sure we get our colleagues in. We have Senator Kramer, and then the very patient Senator Mounts.
And thank you for that, Madam Chair. I'm going to be very quick, and it's not a question. I just want to say thank you for all the work you do to make the Maryland Health Benefit Exchange so incredibly wonderful. But we would be remiss, Madam Chair, and I've been working for years on this issue. Sitting with us, if I may, Mr. Vinnie DeMarco has been not only one of the most incredible advocates, but a catalyst to the success of this program. And we really need to just please acknowledge the fact, all the work that he has done. Because of him, That's one of the reasons this is so successful. That's all I had to offer, Madam Chair. Thank you.
Thank you, Senator, and thank you, Mr. DeMarco, who's now blushing. All right, Senator Mounts, you have the final word.
Thank you, Chair. This is a very quick question. And I'll make sure I have this correct. The connection is just getting people signed up. You don't cover the efficacy of any of the insurance plans. You're just getting people signed up, correct?
Well, we do more than that, because we do have the authority to do benefit design, plan benefit design, and we have we have value plans now, which will become standard plans. And when we do that, that's something the carriers must follow. If we say we have a value plan, carriers, you have to offer this type of plan in the marketplace. Very popular plans. But what that allows us to do is look at what are the public health needs of our state, which, for instance, I'll use diabetes. Very costly public health option in our state. What we do through our benefit design then is we can say, we want you to cover glucometer strips, at no cost before deductible. We want to make sure that insulin is pre-deductible. And so we have different value, what we call value in our value plan, to make sure that the benefit, the products that are on the exchange, people are getting real value out of, and they're supporting our public health needs in the state.
Oh, thank you. I wasn't aware of that. And then the Medicaid eligibility, that's come up a couple times. What is the cutoff for that? Is there a dollar value? How is that? What is the cutoff for eligibility?
To be eligible, it's 138% of the federal poverty level, which I think this year for one person is about 17,000.
Okay. And what are the other cutoffs for the subsidy plans?
Let me think.
Are there too many? I don't want to.
No, that's Medicaid, but then when you're in the qualified health plan, you're eligible for different tax credits based on your income threshold. And I'd have to send you the chart. I don't recall offhand. I don't know, Joanne.
Yeah, so at a high level, the federal subsidies limit the amount you have to pay benchmarked to a certain plan on the exchange to between 0% of your income. So if you're just over that Medicaid threshold at the moment, you would still have basically a premium-free plan. And then that scales up to 8.5% of your income once you're at 400% of the federal poverty level, which is around $100,000 for a family of four. At that point, and above, you would be capped at 8.5% of your income in premium.
Thank you.
Thank you, Senator, and thank you both for being here. Thank you for the information, and that will conclude the hearing, the briefing. And we will take about 2 minutes to allow you to gather your things and the guests that are in the room to do the same. We appreciate your interest in the Finance Committee and see you soon.